Joined by Dave Benoit, Deal Journal blogger, because we are starting off the show with Citigroup's earnings. The big bank came out this morning. Numbers all over the place, very confusing, hard to follow, but Dave Benoit's going to tell us what they mean. What do they mean?
Things don't look terrible, I think is what they mean. So Citi earned about $2.9 billion in the quarter, about flat with last year. The numbers are kind of all over the place because you got to decide whether you take into GAAP accounting rules or not.
Right. I mean, they basically, in the earnings release, they provide you with two separate sets of numbers. Yeah. It all depends on a valuation, an accounting measure, really.
Yeah.
And whether or not you include that or exclude that depends, really, to a large extent, will color how you read the numbers.
So most people exclude it, to be fair. It's about the valuation of their debt. We've seen this last couple quarters with the way bank debt is trading in the market, kind of in wild swings. Citi's debt is worth more to market participants right now, which makes them take a write-down, which sent their quarter.
And this is a big number. We're talking about
1.3
billion, more than
billion,
a billion,
yeah.
Right? So it's a big number.
So the market reaction has been positive so far. Is there a chance that as people kind of digest all these numbers and the complicated release that you referred to, that the sentiment may shift a bit?
I think probably it won't get worse. It depends. Citi hasn't had their call yet, so whatever they say in the call,
right?
In a bit. So that could always change the tone. But I think what people are really focusing on is the investment bank looks very good for them, especially in fixed income. The results are up enormously from both the previous quarter.
So much? Why fixed income?
I mean, part of it I think is the market. Was certainly better. And last quarter was not very good for fixed income. And
you mean the quarter previous?
Yes, the fourth quarter, sorry. Citi also said volume was up, which I think is interesting.
That is interesting.
One thing I took note of was that the deposit base rose about 5%, but the loan portfolio was unchanged, which means there probably isn't as much demand because of weak economies around the globe. What's going on there, and is that a source of concern?
Yeah, Citi's loans were pretty stagnant, which I think is a little bit concerning. We're kind of, loans we've been watching the last few quarters, waiting for something to happen to show us the economy, not just for the bank's health, but for the economy. And certainly for the bank's health, it's an issue of, where their profits are going to come from if they're not growing these loans.
Right.
Though there were some positive comments from analysts on Citi's margins, which have been impacted by higher deposits but fewer loans.
So for Citi, the sort of bottom line is not terrible. Investment banking looks pretty good. Commercial banking kind of flat still.
Yeah.
Stocks up 2%.
Yeah, and they're winding down that portfolio of assets they want to get rid of, which is a good sign too.
Yeah. All right, Dave Benoit, thank you very much.
Thanks, guys.